Now, if we can get the data from brokers on when and which currencies traders are making money on, then surely those are the currencies and those are the times we'd want to make the money. And that's what I've done. I've managed to do that as I've shown in the previous module, but in this one I want to show you when the profits are made, not just in which currencies. So let's just crack on with that immediately, and I'll show you that straight away. So if we take a look at the average pip movement, in other words, that's the smallest move that a currency can make of the major currency pairs during each trading session. So obviously you'll know with currencies, there's the Tokyo session. That's when the Tokyo markets are open, then it switches over to London, then it switches over to New York. You'll see that London time is when you get the biggest movements. Of course, without movement, you can't have profit. So the European session is normally the one providing the most movement and therefore the most opportunity for profit. Why is that? Well, it's actually when London is on that you get most of the money being traded, because London tends to be the global capital of foreign exchange trading, not New York as some people think. And remember some of those currencies we looked at, such as the Australian dollar, Japanese yen, 107 pip movements on average, only a little bit more than, say, the New York session, but still gives you a pretty good idea of when and by how much the markets are moving during each trading session. So if you're trading along London hours, you've got more chance to capture more pips, and that means more profits. Why do I nevertheless particularly like the US dollar sterling, not only to be traded under London hours because you see it's got the biggest move there, 127, biggest between the three trading sessions. Of course, the biggest moves are sterling yen, just so happens that way, 151 pips, and you can see the other ones following through as well. And of course, if they don't move much, you can't profit much. So why is it that I like sterling dollar so much? It's not just because of the pip movements that you see there. There's another reason, which is this. I wanted to show you the profitability by time frame of the top 5 traded pairs. Now, this is US time, Eastern Standard Time, New York time, basically. And you can see that the profitability, according to time frame, even when it's early morning, but basically whatever time it is in New York, sterling dollar tends to be the most profitable. More than 50% of profitable trades. Okay, and you'll see for the others, for instance, dollar yen, basically after New York opens around they start getting busy around 6 to 7, it starts being loss-making for traders. Similarly, a lot of these, when New York is closed, so it's early morning in New York time, is when they're profitable, the most being US dollar, Japanese yen, which is right up there, up until the point where America opens. Then I guess all the traders come in, there's a lot of noise, there's a lot of whiplash, in other words, prices moving back and forth, up and down, and that's why you get these trades then moving into not being very profitable for anybody. So the tip to take from this is twofold. You can look at sterling dollar any time of the day, so I particularly like it, but also if you want to trade some of those other currencies, do it before 6 a.m. New York time. So do it about midnight to 6 a.m. New York time. Well, you might say, well, wait a minute, what time is that in my local jurisdiction? That depends where you are. Of course, if you're in the States, then you may well not want to trade between midnight to 3 in the morning. If you're in the UK, that's still trading from 5 until about 8, 9 a.m., which isn't too bad, actually, for trading. At least it puts the odds in your favor for most of those other currencies. But the reason I wanted to show you this is because it gives you a very good insight into who's making money and at what times and in which currencies. It gives you a very rounded 360-degree view. So one other slide I want to show you in this module, which is how much money should you then trade with? Are there any information from the brokers about the amount of money that their profitable accounts have? And really the answer is this. What this slide shows you is the percentage of profitable traders with the account equity range. In other words, the amount of money they've got in their account. And you can see that those with under $1,000 are very unlikely to be profitable traders. Those with $5,000 to $10,000, well, there are only 37% of them are profitable traders, but you can see it's a big jump up, almost double from those with only $1,000 to $1,000. The moral of this story, well, you should have over $5,000 in your account is the moral of that story there. We're going to move on in this module into the next one now, where we will have a look at other aspects of knowing when to buy and sell, when to make money trading.